Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the chart of gold USD in front of us. And finally, gold is standing at 1900 level, the crucial level. Gold flattest treasury yields rise to multi-year highs. You must be shocked right now. What the hell? Okay, gold is flat. Yes, it's talking about a Wednesday Asian session, and today in the morning, okay, we don't see much volatility, but yesterday we saw heavy sell-off on the chart of gold. It broke all the levels and finally standing, or I'll say just struggling to survive ever above the support of 1900 level right now. But we can still see that 1900 level is not performing well, so there is a further downside possible. Trend is above all. Market says that respect the trend of the market, and the trend of the market is clearly towards the downside. So my dear friends, if you're holding any buy position on the chart of gold, then you need to be careful because further downside possible, and if market starts falling again, then obviously your capital is at risk. If you look at the Forex sentiment meter, probably you guys already know the sentiment meter shows the position of the retail traders. And here you can see that 86% retail traders are on the buy side and only 14% are on the sell side. So if you're also having a buy position on the chart of gold, then you need to be careful because maximum time we always see market going against the sentiment meter. Please be careful. Now let's look at the chart of gold. So if you already have any buy position, then your first priority should be to exit from the buy position whenever market will show any recovery. And if you're holding a sell position, then obviously it's like a party for you. Enjoy the ride of the market because further downside possible. And if you're looking for fresh positions, then yes, watch the video carefully. If you look at the chart of DXY US dollar index, then obviously there is no doubt the market is in uptrend. If in case DXY shows some red candles also during the day, it will just be a retracement, not trend reversal, and we don't have any major news also that will bring a trend reversal on the chart of gold, or especially any trend reversal on the chart of DXY. So you need to plan your trades accordingly. US dollar index is bullish, extremely bullish, so as a result you need to plan your trades. And if we look at the US government bonds, you can see the government bond is also rising. Right now it is going for some correction, but do not forget that bond market is also extremely bullish, so be careful. And this is the chart of gold in front of us. As we all know that gold is standing at a crucial level of 1900. So it is not the level to buy right now. Previously 1900 seemed to be a very strong support, but we are traders, we need to be flexible. We can clearly see the market sentiment is not positive. Market sentiment is extremely bearish. Sellers are dominating. So in this situation, if we plan to go for a buy position, then there's a high risk of hitting our stop loss. So respecting the present trend of the market, sell on rise is the best trading strategy. So during the day, if you see market going up, observe the market around 1906. If the volatility of the market remains like this, 1906 is the level where market will face some resistance. And if market reverses for 1906, 1907, you can look for a sell position. On the other hand, the other level will be around 1910 to 1911. These are the two levels during the day from where we can expect a reversal. And those who have a buy position on gold, you can look for exit around this area if gold reverses. You must be wondering why 1910? Then let me show you. See, here we have drawn FIBO from the top to bottom, and we can see the previous level from where market bounced. This is the level which will be acting as resistance. And if you remember, then 1910, 1911 was also support. It did not work because of the selling pressure, but right now the same level will also act as resistance. And if we consider FIBO from this particular portion of the chart here, we can see around 1906 level. Okay, we have FIBO 23.6% retracement level, and this should also work. So these are the two levels where we can look for a sell opportunity. So right now I'm analyzing the chart on 1 hour time frame. You can simply switch to 15 minutes time frame and look for the market behavior. Wait for the zone. Wait for the market to enter the zone. Do not trade on the middle of the chart. My dear friends, probably you guys have heard me saying multiple times that it is not possible to predict the market at each and every price level. We are retail traders, so as a result, we need to trade on levels that we understand. We cannot gamble. Okay, there's a very thin line between trading and gambling. Okay, don't make the mistake. And secondly, if market doesn't go up, okay, if market doesn't go up and if the market starts falling from here only, high chance, okay, then we can look for some sell opportunity below 1898 as well. Why not below 1900 level? Because see, 1900 was a very important support. If you look at the chart, then you can see that market previously shown sharp price rejection around this area, and along with that 1900 is also a psychological support. So as a result, okay, we need to give some space to the market. So if market breaks 1898 level or 1898.30, my sell stop is around 1898.30. If market breaks the level, then yes, further downside possible, and we can look for a sell position. And let me show you the reason also. This is the 4 hours time frame, and you can see that if market breaks this support here, then we do not have any immediate support. The next big support on the chart of gold is around 1885 to 1887. So this is the next immediate support, and we have a free space here. So if market breaks this level here, then yes, market may come down to this level as well. So that's why I have a sell stop around 1898.30. Let's wait and watch, and please follow proper risk management. Okay, because see, retracement trades are always safer in comparison to breakout or breakdown trades, and because there is also a fear of false breakout as well, isn't it? So as a result, risk management is very, very important. Okay, 100% accuracy is not possible for any trader or any institution, but knowing your loss from before is very, very important. So please follow risk management. So these are the only trading opportunities that I see on the chart of gold right now, and also you need to be careful if you have a buy, because right now the market sentiment is also pushing to gold towards the downside, and right now we don't have any news also that will bring a trend reversal to the market. Because see, you may think that tomorrow we have a news, day after tomorrow we have a news, but you need to understand that not all the news have the strength or potential to change the direction of the market. News like CPI, news like NFP, they are big news, they have the strength and potential to change the direction of the market. But small news, okay, that we are having these days, okay, they do not have the strength to change the direction of the market. They will simply bring volatility for 1 or 2 hours, and then market will continue the overall market sentiment again. So let's wait and watch. We can also see a bearish flag here, so yes, further downside possible. And please follow the trend of the market. Following the trend of the market is very, very important. Maybe the trend will change after a couple of days, I don't know now, okay, but after a few days there is a possibility that market may go up again. In that case, again, you need to follow the trend of the market. So following the trend of the market is very, very important. Okay, so always keep in mind that fundamentals give direction to the market, and technicals are helpful for entry and exit purpose only. Okay, if a market is falling and if you think that there is a support, market will reverse, no, this is not going to happen. Because if a market is being driven by fundamentals, then technicals will not work. Technicals are only helpful for entry and exit purpose, but fundamentals give direction to the market. You cannot trade simply relying on technicals. You cannot trade simply relying on fundamentals. You need to know when to trust the fundamentals and when to go with the technicals. So that's all from my side, my dear friends. Bye bye, take care.